Hello, welcome back to this week's market update. Today is Monday, November 25th, 2024, and with that, we will jump right into this week's market update. It was a quieter week ahead of the Thanksgiving holiday, with stocks finishing up on a positive note. As of close on Friday, November 22nd, the Dow Jones Industrial Average led the gains, up 2% last week, followed by the Nasdaq Composite, up 1.75%, and the S&P 500 not far behind, up 1.72% last week. Bonds were relatively flat, with the Barclays Aggregate Bond Index ending up a slight 0.16% on the week. Heading into our economic data of the week, the Conference Board's LEI, or Leading Economic Index, posted a drop of 0.4% in the month of October, following a drop in September. We also have seen the 6-month rate of change falling at a faster rate than it did 6 months ago. So it is declining. Leading economic indicators are demonstrating a decline, and the pace of the decline is slightly faster than it was 6 months ago. Then breaking down the different elements in the LEI, we saw new orders, new manufacturing orders as the largest negative contributor, followed by average weekly manufacturing hours also being quite negative there, in the inverted yield curve as well, measured by the 10-year minus the Fed funds rate. Then on the positive side, we saw the S&P 500 be a little bit of a help to the LEI, followed by the leading credit index as well. So overall, leading economic indicators continue to foreshadow some sort of economic downturn or recession, but again, we have yet to see that in the economic data. Moving along in our week, we also got existing home sales data for the month of October. We saw the first year-over-year gain in sales volume since July of 2021, with sales up 2.9% from a year ago in October, totaling 3.96 million in the month. Inventory, though, has been sticking around a little bit longer at 4.2 months compared to 3.6 a year ago, and the median sales price continues to gain at a very modest pace, although it is down from earlier this summer at 407,200, which is an increase of 4% compared to October of 2023. Looking at some notable earnings calls from last week, we had NVIDIA as well as Target and Walmart all report earnings. NVIDIA beat on both the top and bottom line expectations. However, markets were slightly concerned over the slowdown in sales growth, which is still at a very impressive 94% annual sales growth in the most recent quarter. So not very slim sales growth there by any means, but it's no longer in the 200% like it had been seeing in previous quarters. Here you can see the trailing 12 months revenue growth for NVIDIA. They were at 200% just a few quarters ago. Now they are at 152% year-over-year sales growth in the trailing 12 months. So again, still not hurting for sales growth by any means, but markets are concerned by this downtrend in sales growth for NVIDIA. On the other hand, last week, Target missed both revenue and earnings expectations for the third quarter, in contrast to their largest competitor, Walmart, which beat estimates and offered very strong forward guidance. Target's earnings per share fell 20% below Wall Street's estimate, marking the biggest miss in 2 years. The company also lowered its full year guidance, and you can see how the stock reacted to the news, down over 20% at one point in the morning following the news. Last but not least, initial claims for the week ending November 16th came in at just 213,000, so that's below the previous week and continues this downtrend that we've been seeing since October. We had both hurricanes and labor strikes in this period here, so that caused a little bit of this uptick in initial claims. This also comes after a sharp decline in non-farm payroll gains in October, which reached the lowest level since 2020, only 12,000 jobs added in the U.S. in the month of October. The true test of labor market conditions, though, will come in the November employment report due in the first week of December. So overall, it was a quieter but still positive week for markets. Lots of updates in earnings as well as some economic indicators that we took a look at. So we just thank you so much for tuning in to our weekly market update, and we look forward to providing another update for you soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.